May profits be upon you. Let's take a quick look at the Aussie Swiss. Aussie Swiss. We're going to do a little top down analysis starting from the daily. All right. What I want to take a look at on the daily is the bias. You see that price came from this high, made that low, and then we made a lower high relative to that one, right? From here, we're making a series of lower highs and lower lows. All right. Price is moving very bearishly here. We see that we broke this high here. I better start marking up stuff. So we broke this high, right? And you're thinking, price might be turning bullish. All right. We pull back and then we go past that high. We break this high, a break of market structure there. All right. And that looks like it's good. However, we made the double top here. All right. We found supply here and price dropped, breaking. This is a trading range here, breaking the top of this trading range and then the bottom. All right. What is that telling you? Price has shifted from bullish to bearish momentum, right? And then we break this low. All right. We made a new lower low. Now, after making a lower low, what do you expect next? A lower high to be made, right? Boom. This looks like that lower high. And what makes me really think it's a lower high is just because it's a proper pullback. What do I call proper? At least 62% pullback. Boom. Why don't you write when I need you to? Boom. All right. So we've come up to that 618, 61.8 Fibonacci retracement. I'm expecting a lower low to be made after that lower high. That's if that's what we established. Now let's go to the 4 hour. What do we see? You see, I've drawn in some 4 hour areas of supply and demand. All right. We have 4 hour supply here, 4 hour demand here. All right. And we can see how price is reacting to these zones. All right. We drop from the supply into this demand area, and we see that there is a reaction here, right? It's a pretty tight consolidation that we've been in this consolidation for a little while, looking for a breakout. It looks like we are slowly making lower lows here, right? But is it time for it to drop to make that lower low on the higher time frame? Are we gonna, I'm looking forward to get down here. You know what I mean? But uh, liquidity is going to tell us that. All right, we have liquidity up here at um, these peaks. All right, uh, always at the end of wicks, the highs, there's going to be liquidity in the form of stop losses and pending orders for people who are waiting for breakout trades to the upside, but stop orders for people who are taking shorts. You understand? And that's what motivates price. That's why I have it marked here in here. Let's go down to the 1 hour where we can see this price action in a little bit more detail. I have this liquidity marked here because these highs, this one, all right. This is definitely going to be a magnet to price. On the other side of that is down here. All right. Uh, price want to make the move down first and then come up, or continue higher, or whatever. So that's not what we're going to look at. We're going to look at this break of structure. Once price breaks structure to the upside, you got to think, hey man, uh, price is looking pretty bullish. All right, and after every impulse comes a correction, and that retracement is what I'm looking for, and this will put us right around 70% retracement if it decides to retrace here and then continue higher. That's what I'm looking for, because After every break of structure, there's always a return to the impulsing order block that sent price to break that structure in the first place. And that originating order block is here. That's why I have it drawn out here. Okay. And I'm thinking price will pull back and we'll get this blue arrow uh, illustration here. All right, we'll see. We'll see. Price might want to continue on down from here and make that higher time frame lower low. All right. The way we're going to find out whether we're going to take a trade or not is if when price gets in this area here on the lower time frame, say the 15 and the 5, you'll see price give a low, a lower low, a break of this structure here, a return to impulse, and then continue up higher. We'll see that when price meets our POI. That's what I'm looking for anyway. If we don't get that confirmation, hey, no trade. No confirmation, no trade. And price will just continue on down. But I have a sneaky suspicion because of the way price left this level. This is a very nice impulse. Yes, we have this long way down to retest the base candle of this multiple candle engulfment of this bearish move here. The last bearish move before the up move, the last down move before the up move forms our order block. And price loves to mitigate and get those orders and take them up, right? Come back, mitigate out of those orders, and then continue higher. With the bullish orders that it already has. It mitigates out of the sells because this is a sell to buy move. It mitigates out of the sells so that it can continue making profits with the buy orders. And as soon as they're ready to take profits, which I'm thinking is going to be here, this other the supply up here, then you'll see price come back down because of they're taking profits. So that's what I'm looking at. That's the scenario I'm looking for. Leave me a comment and tell me what you think of this setup. And if this is not uh, this is kind of new to you, this kind of strategy, hey man, ask questions. I'll be happy to answer them. I always respond to my the questions and comments of subscribers and people who view. Okay, I will see you in the next video. Trade safely, and do leave me a like if you want to support free education, free analysis provided to you for you by me, RT Money. I'll see you later.